Good morning, good afternoon, and especially good evening to the viewers in Asia, since it is 9 p.m. back home in Hong Kong, and welcome to our quarterly AFC1 Fund webinar. My name is Thomas Hooker, and I'm the CEO and founder of Asia Frontier Capital. With me today are Ruchir Desai in Hong Kong, who's managing with me the AFC Asia Frontier Fund. Ahmed Tabaqchali, the chief strategist of the AFC Iraq Fund, is today in Baghdad, Iraq. Scott Osheroff, the Chief Investment Officer of the AFC Uzbekistan Fund, joins us from Tashkent in Uzbekistan, and Vicente Nguyen, the Chief Investment Officer of the AFC Vietnam Fund, is based in Ho Chi Minh City and will talk about investment opportunities in Vietnam thereafter. This webinar will take about 45 minutes, and thereafter you will have the opportunity to ask questions during our 15 minutes Q&A session after the presentations. You can submit your questions online through the Q&A icon at the bottom of this Zoom video. I have to repeat again that there is never a dull day in our AFC universe, and the first 30 days of 2023 confirmed this already. The year started with economic issues in Pakistan, where the currency, the Pakistan rupee, lost this year already 15% versus the US dollar. On the positive side, it seems that a solution might be found soon in Sri Lanka with the holders of Sri Lankan government bonds that will hopefully entice the IMF to provide new loans to the country. The recent turmoil has pushed our AFC funds PE valuations to all-time lows, and we view this as an investment opportunity now, especially Vietnam. All 4 funds should achieve a positive performance this month. But let's listen to our fund managers now. As usual, Ruchir Desai will provide us with economic updates and investment outlook for the Asia Frontier markets and the AFC Asia Frontier Fund. Please, Ruchir, it's up to you now. Thank you.
Thank you, Thomas, and welcome everyone to our quarterly webinar. And good to speak to you again. As Thomas mentioned, it was a pretty exciting start to the year with various kind of news flows. But having said that, just on the bigger picture, I think it's been a pretty strong start to the year for pretty much all the markets globally, especially in Asia with China reopening. And that's kind of had a bit of a tailwind for our markets as well, especially Vietnam. So starting off, I'll just, spend a few minutes briefly on especially the US macro indicators, which I guess is the most important right now globally, because that's affected sentiment both in frontier and emerging markets over the past year. So starting off with the inflation in the US, that's been basically the biggest talking point, I guess, over the last 12 or 14 months amongst investors. But as this chart shows you, and I'm sure many of you are aware that US inflation has been coming off over the last couple of months, especially in November and December, compared to 9%, say, in the summer of 2022. So all indications are that inflation will probably keep coming off as you move into 2023, given the base effect as well as lower commodity prices and also some supply chain issues improving, which I'll talk about as well moving on later. So moving on, I think besides US inflation, the other talking point has been the interest rates in the US, which I guess is linked. I think both topics are very interlinked to each other. And the Fed has been very aggressive in raising interest rates, as we all know, in the past 9 or 10 months. But clearly now, given the inflation has been, kind of peaking off, my view is that, interest rates, I guess, in the US and therefore even globally have peaked out now, because many central banks globally follow pretty much what the US Fed is doing. So I think you saw 50 basis point increase in December. Whether it'll be 25 or 50 basis points in a few days, we'll know pretty soon. But I think all indications are, and my feeling is that interest rates have peaked out in terms of we will not see the same kind of aggression from central banks that we saw last year. Maybe a few interest rate increases here and there over the next couple of months, but definitely not what we saw last year. So from that angle, I think we are moving into much calmer waters in terms of both inflation and interest rates. And also, as the next slide shows you, interest rates pretty much even in Asian frontier markets and also in Asia were raised pretty aggressively in 2022. So within our markets, Sri Lanka, Kazakhstan, Pakistan raised interest rates very aggressively last year, as this chart shows you, and also some other markets in Asia like Philippines, Indonesia were also very aggressive in raising interest rates. But like I said, clearly I think we are past those aggressive interest rate hikes. I mean, if you look at the commentary from the Philippine Central Bank and the Indonesian Central Bank in the last week or so, both have indicated that they are through with their aggressive interest rate hikes. So I think you'll see kind of interest rates peaking out even in Asia and within the Asian frontier universe in the next 6 months or so. And there's a very high possibility that given inflation coming off in many of our markets and how aggressive central banks have been in our universe, you'll see some interest rate cuts probably in the back half of this year, especially, for example, Georgia, for example. They only had to increase interest rates by 50 basis points last year. That's because their currency has been so strong. The economy has been doing very well, but inflation is now coming off. So I won't be surprised if some central banks, for example, like the ones in Georgia, will actually cut interest rates in 2023. So the key message here is that the key headwinds of last year, which were inflation, interest rates, I think we're behind that. Going forward, I think we'll see probably these peaking out, investors talking more of lower inflation and maybe peaking interest rates, which I think will be very positive for investor sentiment going forward. Moving ahead, having said that, besides inflation and interest rates, I think the other key factor last year which impacted uh, our markets, Asian frontier markets, and also emerging markets quite negatively was a very strong dollar, given the aggressive Fed. But I would say in the last 3 or 4 months, as this chart shows you, this is the dollar index in maroon since the end of September 2022. It's been quite weak. It's down almost 10%. And that also has a very positive impact on investor sentiment and also emerging and frontier market currencies, and therefore markets as well. So the emerging market index has actually significantly outperformed ever since the dollar has got weaker in the last 3 or 4 months. And the frontier market index also has rallied, but not as much as the emerging market index. But of course, you have China and the emerging market index, which has done very well since around November, given the fact that it's reopening and there was a lot of positive sentiment coming into Chinese equities in the last couple of months with all the reopening news. So clearly, I think the weaker dollar also will play a very significant role this year in improving investor sentiment across both frontier markets and emerging markets. So I would say these two key factors, which is a combination of factors, which is inflation, lower inflation, interest rates peaking out, and a weaker dollar, I think will all combine to have very positive investor sentiment within emerging and frontier markets in 2023. Moving ahead, having said that, also on the inflation side, I think you've seen commodity prices come off quite significantly. I think the most significant surprise, I guess, amongst investors has been the natural gas price, especially in Europe, which is down quite significantly since the summer, given that I believe it's not been too cold in Europe and they built up some pretty good amount of inventory. But besides that as well, crude oil is basically flat for in the last 12 or 13 months. And the other commodity prices also haven't increased significantly. One caveat, though, is there is talk that if China reopens and there's a pretty strong comeback economically by China, then commodity prices could rally a bit more from here. We'll see what happens over there. But because of that, I think we are still underweight Pakistan and Sri Lanka because they are so heavily dependent on imported commodities and imported crude oil, especially given the fact that they have a pretty weak macro position. So given the fact that if commodity prices do rally from here, we don't want to be having a high weight to these risk-prone countries like Pakistan and Sri Lanka from a macro perspective. Moving ahead, I think even from a supply chain perspective, like I was mentioning, the container shipping prices have completely crashed in the last 6 or 7 months. And that's going to be very helpful for inflation going forward from a supply side perspective as well. Moving ahead to the next slide. So that's more on the macro in terms of the inflation, interest rates, the US dollar, and some of the pressures in inflation, which probably should ease going forward. And also there's been a lot of talk about recession or slower economic growth in US and Europe. We'll see how that goes the next couple of quarters. But as this chart shows you, none of the countries in our universe, which are the bars in bright red, are anywhere close to a recession. Yes, slower economic growth. Won't be a surprise. I mean, given the fact that there is going to be globally a slowdown this year after the war in Ukraine, high commodity prices and high interest rates of last year. But clearly these growth rates are still quite solid compared to, for example, other emerging or frontier markets like Nigeria, which is 3%, and it's one of the stars of Africa, but still significantly lower than Asian frontier markets. South Africa is doing about 1% GDP growth, but in our universe, you've got much more solid growth rates, with Vietnam and Bangladesh doing 6% plus GDP growth rates. Maybe they come off a bit in the next round of estimates from the IMF or World Bank, but I don't see them doing 3% or 4% or anywhere close to 1% GDP growth this year. They'll be significantly doing much more, at least, if not, I think even if they do 5% GDP growth in this year, in this environment, that'll be very good. And also the other countries in Central Asia are doing pretty well at 4 to 5% GDP growth. So overall, pretty solid growth numbers here despite downgrades. And I think they've got some our universe has got some tailwinds which are helping them. I mean, besides the demographics being in their favor, infrastructure spending being in their favor, I think the bigger picture is the supply chain shift happening from China into Vietnam and Bangladesh and Cambodia, which is a strong tailwind. And also you have the kind of the supply chain shift happening in Central Asia also, which I'll talk about. So some very strong tailwinds for our universe going forward, not only 2023, but also in the long term as well. And moving ahead, so this is what I was talking about, which I just alluded to in my previous slide about Central Asia benefiting from a supply chain shift. As the chart on the top left shows you, Georgia has been basically the clear star in Central Asia, at least in 2022. When the war began, when the war in Ukraine began, everyone was too concerned about the Central Asian countries, especially Georgia, given it shares a border with Russia and has some history with Russia geographically as well. But their tourism revenues have completely skyrocketed since March and April of 2022. I think they're one of the only countries, I would say globally, which have gone back to pre-COVID levels of tourism revenues, and in a very strong way. So they've already gone back to pre-COVID revenues this year in a very short period of time, because a lot of long-term visitors or migrants have moved from Russia, Belarus, and Ukraine into Georgia. And that's really helped the economy as well. It's also increased remittances, increased their foreign exchange reserves. And like I mentioned, it's also helped their currency. So I think Georgia, one of the few currencies, the Georgian lari was one of the few currencies last year which actually appreciated against the US dollar, which is quite astonishing given that most currencies depreciated last year against the dollar. And as the chart on the right shows you, ever since the conflict in Ukraine began, I think most companies or most industries have been looking for ways to bypass Russia or the geography of Russia when moving goods from east to west and vice versa. And of course, Central Asia being in the region has really benefited a lot. Countries like Kazakhstan, Georgia, Uzbekistan have benefited significantly as many supply chains have moved away from Russia into this territory. And this chart basically shows you how this new route, which was being developed even before the war began, but has really accelerated in the last probably 6 or 9 months. It's called the Trans-Caspian International Transport Route, and you're seeing more and more goods being transported through this route via the Caspian Sea and the Black Sea into Turkey and then into Eastern Europe and other parts of Europe as well. So this is very beneficial for basically pretty much all of the Central Asian countries, which are mentioned on this map over here. And besides that, one important trend which I mentioned earlier, with respect to the migrants moving into Central Asia, that's really helpful from a human resource perspective. So you have a lot of highly skilled people from the technology industry or the services industry in Russia moving to, say, for example, Uzbekistan or Georgia or Kazakhstan. So it really helps these economies really build up their human resource as well. From that angle, also, this is some kind of a shift happening into Central Asia. So I'm quite bullish on Central Asia, and that's the region to watch in my view. This is a region that one should keep a watch of in the next probably couple of years. And moving ahead, this slide I've spoken about in my previous webinar, in our previous webinars as well. I think many of you must be already pretty much aware that Vietnam has been the biggest beneficiary of the trade war between the US and China, as well as all the zero COVID restrictions that China had until just a couple of weeks ago. And you've seen a lot of manufacturing related foreign direct investment move into Vietnam because of this, across industries like mobile phones, electronics, garments, and footwear. And as the chart on the top left shows you, foreign direct investment into Vietnam has been very consistent, even when there was COVID and all these sort of issues. It's been about 6% of GDP on a consistent basis, and it's amongst the highest in Asia in this region. And as the chart on the right shows you, just for the garment sector, ever since the trade war began between the US and China in 2018, 2017, 2018, China has basically lost market share for garment exports to the US. And that market share has gone to Vietnam, which has gone from 14% to about 18%, and Bangladesh from 6% to about 10%, and to some extent Cambodia. So these three countries have really benefited a lot from the trade tensions between China and the US, and they've captured market share in garment exports. It's not really gone to India and Indonesia. It's gone more to Asian frontier countries, which have really done very well. In fact, Bangladesh's garment exports, despite all the talk of slow growth in the US and Europe, which is Bangladesh's biggest export markets, their garment exports have grown by 16%. As the bullet point below mentions, they've grown by 16% in the last 6 months, which is quite impressive. And for example, in Vietnam, Apple and Samsung are moving up the value chain. So Apple's going to start assembling their Apple Watch and the MacBook in Vietnam, and also Samsung will do some semiconductor parts in Vietnam as well. So clearly, these countries are benefiting not just from run-of-the-mill assembly, but also more high value-added stuff that they're going to be start doing in the next couple of years. Going ahead. And another big trend which we feel will really benefit our markets, and we've already seen that happen in the stock market. Many Asian markets have already rallied a lot in the last couple of weeks because of China's reopening. For example, Hong Kong and some other ASEAN countries have done very well, including Vietnam. The stock market's up more than 10% so far in January. But from a tourism perspective, I think China's reopening is something which is, I think, quite significant going forward. Maybe not in the next 2 or 3 months, but definitely going forward into the second half of 2023 and also moving into 2024. It'll be very beneficial for some of our markets because Chinese tourists accounted for a large chunk of arrivals in many countries within the Asian frontier universe. For example, in Cambodia and Vietnam, they accounted for more than 30% of arrivals. But even then, I think in general, tourism is making a comeback, both in, say, for example, in Sri Lanka, as the chart on the top left shows you, they've seen a pretty good increase ever since there's been some political stability, and Vietnam is seeing an increase as well. So I think tourism is a theme which is very important for this year, and also China reopening will give it an added boost going forward as well, which will be helpful for these economies. Moving ahead, and just coming a bit to our top country picks. I think over here it's more from a macro perspective why we like these countries. I know there are other countries which also have good stories within our universe, but I think given the fact that debt has been such an important driver, or debt levels or external debt levels have been such an important driver for distress in many of I guess, Asian frontier countries and also some other developing countries. I think these countries, which are highlighted in red within our universe, have very low debt levels and, more importantly, very low external debt levels. And that's why we like them. I think they can maintain the macro stability going forward, despite some geopolitical headwind or some macro headwinds. And that's why we like them. And overall, I think in general, their current accounts have been in surplus in the last quarter or so. There are some good tailwinds like supply chain shift, which is helping them. So that's why we like these countries, and that's what we would kind of focus on. Countries with a strong macro, with a strong macro position. And coming to our bottom-up stock selection on the next slide, as the slide shows you, this is some of our top picks within our universe, and also the fund owns these stocks, and this is across pretty much all our markets. I think an important point from this table is the P ratio, which is the third last column. Basically, the P ratio for all these stocks is less than 10 times. And even for the one which is above 10 times, it's 12 or 13 or 14 times. But more importantly, which I mentioned even in the previous webinar, it's a low P ratio backed by strong fundamentals. If you look at the ROE or the return on equity in the last column, it is significant. These are solid ROEs. These are good businesses with 20% plus ROEs. So they've managed previous crises very well before, and they're still doing it pretty well even now, despite the situation that they're in. So very strong fundamentals, attractive valuations, strong brands. And in fact, many of these stocks have already done pretty well so far in the last 1 month, ever since the markets have been rallying in Asia. So we see some good returns for many of these companies so far this month. And moving ahead, and just coming to valuations on a more big picture basis, our AFC Asia Frontier Fund trades at a PE ratio of 7.7 times. that's basically gone back to where it was in the March 2020 when the pandemic began. So you have very attractive valuations, but you have bottom up very solid fundamentals for our companies, like I just showed you as an example. So I think the question is, what can drive these PE multiples to expand? I think it's what will drive pretty much global stock markets PE multiples to expand, which is inflation peaking out, interest rates peaking out, and the dollar weakening. So I think all these three factors will play a very strong role even in our markets, and therefore I think we are pretty much at the bottom. And I think the cycle has turned for Asian frontier markets as well. And as the next slide shows you, this is also just the discount of the discount of the P ratios in our markets against the 5-year average. Pretty much all the markets trade a significant discount to their 5-year average. So this is just adding on to my previous point that I think the cycle is turning, and this is the time to look at Asian frontier markets from a 3 to 5 year perspective. And as the next slide shows you, it's just elaborates on that point even more. It's the discount of the discount of the MSCI Frontier Market Asia's P ratio to the S&P 500. It's trading at pretty much a huge discount compared to where it was, say, in 3 or 4 years ago. So as the cycle turns, I think you'll see this multiple also expand going forward. And that's not only that's pretty much across frontier markets, as the next slide shows you. This is the P ratio of the MSCI Frontier Markets Index, which is basically at crisis levels. It's back to where it was in 2008, 2009. But if you look at this chart, every time the P ratio has fallen so much, it's come back nicely and come back very strong in the next couple of years. So I think, again, you're seeing a bit of a rebound as the chart shows you on the extreme right. And I think the cycle has turned, like I said, and I think all the factors are moving in the right direction for frontier markets as well. And so that's a brief on why I believe the cycle has turned. And I'll just wrap up with some brief points as to what I believe is the key message that I want to give to you. One is obviously, which I mentioned earlier, is the fundamentals of our portfolio are very solid. Valuations are attractive. ROEs are great at 26%. You have strong earnings growth over the last 3 years. Solid fundamentals. But again, I just want to reiterate, I think the aggressive interest rate hikes are behind us. These were the key headwinds. They're behind us. I think interest rates have peaked out. Inflation has peaked out. Investor talk last year was all about high inflation, high interest rates. I think this year will be all about lower inflation. People will talk more about low inflation, interest rates peaking out, or low, interest rates moving ahead in a much slower direction. And also China's reopening can have a very positive impact, not just on, in general on Asian markets, but also many Asian frontier countries, like especially Vietnam, Sri Lanka, and Cambodia. So I think in my view, yes, there'll be some uncertainty. If the Fed makes some hawkish comments, then in the next monetary policy meeting, there could be some volatility. Earnings may not be very strong, so there could be some volatility. But I think more importantly, the key headwinds, like I said, are behind us. And more importantly, the 3 important factors which are really important for frontier and emerging markets, which is interest rates, inflation, and the dollar, are all moving in the right direction for valuations to improve and sentiment to improve. So my view is similar to last time. I don't change it. You should add risk with the 12 to 18 month view. And I think you'll come out in the green going forward. So that's my key message. And with this, I would like to hand over to Ahmed, who is the chief strategist of our AFC Iraq fund. Over to you, Ahmed. Thank you.
Thank you, Ruchir, and welcome all. Thank you for all attending. Can I have the next slide, please? Well, first of all, you'll see here that we've had a phenomenal return last year versus other markets. It's never good to be happy about a negative return year, but a tiny negative, especially if you adjust it for local currency, it's been sort of flat to slightly up, but it shows very strong returns. And I think it shows the difference that Iraq can add in terms of adding diversity to any portfolio. The returns almost just speak for themselves. And I think even year to date, they can speak for themselves. Can I have the next slide, please? Here right now is a message that I've been sort of like giving last year, and I think I'll continue to give in the next few months, and that is Iraq is a key beneficiary of the changed world post-Ukraine. Well, I don't really believe, and I've never believed, that oil prices would be at or sustainable at any levels higher than current levels. So I'm not sort of like forecasting anything like that. If anything, I'm forecasting slightly higher oil prices than where they are right now. But this higher oil price environment is extremely positive for Iraq in so many ways, in the sense that the country is very leveraged to oil spending, so to oil revenues, and leverage, extreme leverage as a result from that to government spending, which pretty much drives the economy. We've had two sort of exceptional years in the sense that we've had no budget last year, in the sense that we had elections, we had government formation process that took almost a year before government was forced. So we had no budget. But when a budget was passed, you can see its effect on the economy fairly significant by looking at the chart at the bottom left-hand corner, which is basically on broad money in the economy and the change year to date. And you'll see that we've had a phenomenal years starting actually from mid 2020 in terms of huge amounts of liquidity injected into the economy, and as a result there have been enormous expansion in economic activities, and you'll see it here in the amount of money and the year-to-year change. Now also the lack of a budget spending basically last year meant that there was a slowdown in the money growth, and you can see that in the reflection of the decline from mid-July last year to almost year end. And then there is a pickup. I think the pickup is coming in because we passed a supplementary budget, which we reflected in non-oil GDP growth, and you'll see the non-oil GDP growth reflecting the increased amount of money stuck in the economy, and you can see it in the bottom right-hand corner. Now, one of the things that I am sitting here in Baghdad, but none of you anywhere know or know what Iraq apart from it in the papers. But one of the things that you don't see, and I can see as a reflection of this, is the enormous pickup in economic activities on a daily basis wherever one goes out in Baghdad, which will be a subject of a news sort of Iraq news that I report on how much construction activity is taking place. Anyway, that is there. But however, another very important factor here is the fact that Iraq's beneficiary, as a key beneficiary from the developments in Ukraine and the subsequent developments afterwards, can be seen in the bond spreads, which are on the top right-hand corner of the chart. And you'll see that, yes, as interest rates were rising across the world, Iraq spread suffered, which is quite logical, but also you can see they have declined significantly compared to the past. But that is yet to be reflected in equity market or on the look at equity markets. So overall, in all, unlike many governments worldwide, Iraq has got enormous wherewithal for the government to spend on the economy and follow expansionary policies. The current government formed in October. They haven't had a chance yet to present a budget, but it's expected in the next couple of months. And while there was no reports on it yet, there are some leaks here which suggest that we could see spending of up 50% year to year, which would be an enormous boost to the non-oil economy as well as to most groups in the portfolio and the market. Can I have the next slide, please? Now, with these improved fundamentals, you'll see basically a market that is just emerging from a multi-year bear market. Iraq saw a phenomenal bear market that almost lasted from mid-2014 till end of 2020, and which you'll see beginning of 2020, which you see a huge decline in the market, almost like I think in the region of 68% or thereabouts from top to bottom. In spite of a good year in 21 and a flat year in 2022, we are still about 62% below the peak, giving us enormous room for upside should these fundamentals be reflected into corporate earnings. The market this year started strong in local currency terms, and I'll talk about that in a minute. It's almost up 7.5% in local currency terms, and the portfolio is up almost 12% in local currency terms. However, we've had a decline in the currency, and I'm sure most of you who follow Iraq news probably are aware of all the sensational headlines about money being exported to Iran or smuggled to Iran and all that kind of stuff, and action and so forth. And this is really one of the few things that always distinguishes investments in Iraq, in the sense that there is a lot of news and that mostly is misinformation or wrong or tends to highlight the extreme negatives and none of the positive. Yes, we've had a meaningful change in the market price and the currency, but from let's say before the change till today, it's up about, I have it here, at about 13%, oh, sorry, 13% from mid-November till today. Nothing to worry about in terms of globally, but for Iraq, it's relatively large since we don't have such massive currency swings in a few months. Year to date, the currency is down about 9% versus the dollar, which explains why we have negative performances in the index and so forth. But most of the news, basically, the difference in the currency is a function of Iraq finally joining the world in terms of its cross-border fund transfers. We are now required to comply with procedures that have been applied everywhere else. Our informal economy, or the large part of the economy which is informal, has been struggling to deal with that as opposed to anything extra or anything sinister. I'm more than happy to discuss this in greater detail, but I don't think there's the forum for it now. But if anybody's interested to know more about that, I'm more than happy to talk one-on-one and answer any questions on the currency and any developments. But I'll end it up with the message that if you look at the risk-reward performance in terms of fundamentals and in terms of market action, Iraq comes out as a very attractive proposition. You can see it here in the right-hand corner of the chart. Any recovery, any meaningful recovery, any interest in Iraq from global investor that would be a mirror of the change in the bond market, you'll see the market rise enormously. With that, I thank you all for listening, and I pass on to my colleague, Scott, who looks after our Uzbekistan fund.
Thank you, Ahmed. Good day, everyone. Next slide, please. So as we've said over the past few years since we started investing here, the situation in Uzbekistan is stable, and it's been such through COVID and continues to be. But of course, the economy has been rebounding as the world has opened up again. 2022 sort of statistics have just come out. They're trickling out. We got GDP today, which was up 5.7% for the year. And tourism had a huge surge during the year, up to about 6 million tourists from roughly 2 million in 21. And that's a result of predominantly Russian, Belarusian, and Ukrainian tourists coming here, fleeing conscription and whatnot, and also a lot of businesses moving to the region. Further, what we're seeing is as Central Asia reconciles its historical issues. For example, the president was in Kyrgyzstan a few days ago, and they finalized demarcation of part of the border. You're seeing more regional tourism from a business angle, and then of course tourism as well. And since we started investing here, we believe that in the next 10 or 15 years, Uzbekistan can certainly emerge into being the biggest economy in the region. The country is generating that gravity, is a place to do business. So tourism numbers have surged, and we expect to see that continue to happen. Meanwhile, inflation has remained relatively stable. For last year, inflation came in December at 12.25%. We expect inflation to remain in the low teens. There will be some upward pressure in the first half of the year as a result of a very cold winter, which I'll talk about in a little bit. And that's seeing some upward pressure on food prices. But nonetheless, with inflation 12, 13%, we don't look at that as being bad, especially when you consider that a lot of the Western world has high single digit or low double digit inflation. And Uzbekistan has always been hostage to high inflation, but nonetheless, it's remained stable in a world of volatile commodity prices. And I believe that while in the West, you're seeing a large amount of disinflation, at least going into the first half of this year, commodity prices will begin to pick up as they already have, with oil being up nicely this year, along with copper, etc. And that'll probably reignite inflation to a degree, which nonetheless in Uzbekistan will have it, but it should remain relatively stable and subdued. Next slide, please. So the capital markets, the last year, in so few words, it was very dull. There was not much going on, unfortunately. We were hoping for 3 IPOs to happen: Uzmet Kombinat, Uzavto, and Al-Malik. None of them did, but the year is off to a good start nonetheless. Well, I guess also we were hoping that last year there was going to be comprehensive capital markets legislation passed by Parliament, which again got delayed. So what's happening now is Uzavto has begun their book build, and they should be placing some of the government shares in the next few months. And Uzmet Kombinat should be preparing to IPO or do a secondary offering sometime in the first half of this year. So frontier markets, things take time. And in Uzbekistan, that's very much the case, but we're still optimistic, of course. Things are moving in the right direction. And on the 17th of January, Clearstream came here, meeting the Ministry of Finance, Central Bank, the exchange, to discuss introducing a custody link, which will allow foreigners to invest into the Uzbek capital markets, starting with probably the bond market and then moving to equities without having to open a brokerage account here, which for those of you that have read up on the country, been here, you understand that it's a very big issue and challenging to get your documents translated and whatnot. So that'll be a coup for the capital markets here. And technically, we don't need any new legislation passed for this to happen. What Clearstream wants is for an international bank to come here and to be able to help them offset their the currency risk. So there are a few banks that are entertaining coming here, and once that happens, theoretically, very, very quickly thereafter, Clearstream could establish a custody link here, and we'll be off to the races. Something that we've been waiting for a long time, and the current CEO of the Tashkent Stock Exchange, who's the former CEO of the Georgian Stock Exchange, is very focused on doing. It's one of his main KPIs. Meanwhile, the El Sasovda OTC platform was supposed to be integrated with the Tashkent Stock Exchange last year, but again, another delay. And about a week and a half ago, trading was halted on the exchange, and the Ministry of Finance was supposed to give final approval for transfer of control of the platform to the Tashkent Stock Exchange. Well, I was written by the CEO today and told that trading is going to start tomorrow. So henceforth, all regulatory aspects of trading on the OTC market will be managed by the Tashkent Stock Exchange, which of course should allow for enhanced transparency and hopefully new capital flowing into the OTC market. Next slide, please. So a little bit of local news because it's worth mentioning. This is probably the coldest winter that Central Asia has had in 50 plus years, and is a result of very robust GDP growth in the region, specifically in Uzbekistan, with natural gas demand more or less doubling in the past 5 or so years. The country was planning to, this winter, as they do in other winters, experience a moderate energy crisis, which makes international news, but is usually nothing too significant. But this year it was really bad. And that's because on the 12th of January, it got to be as low as -27 in Tashkent. The government had signed an agreement in December with Turkmenistan to supply bridge gap natural gas for a few months, 45 to 60 days, to offset the energy deficit, which would be as a result of it being very, very cold. The problem is that the wellheads in the Turkmen fields froze, which means with liquid in the pipelines that froze, Turkmenistan shut down its fields, and on the 12th of January, they stopped exporting gas. And that plunged Uzbekistan into a deep energy crisis. I have friends here that had no hot water, heat, electricity for 6 to 10 days. And I can only imagine in the regions it was much worse. In Tashkent, you saw pictures of people cooking in the streets. So it was back to the Stone Ages, which is very unfortunate and very, very bad PR. So as a result of that, on the 16th of January, the president of Uzbekistan fired the mayor of Tashkent and the head of the thermal power plants company, obviously to offset some anger from citizens. And the government is trying to figure out how to, well, they know that they need to invest further in the natural gas fields. So that's a priority. And there's been a whole bunch of course, talk and rumors as to what the result of this is. But everything's fine now. The country's got enough energy. Turkmenistan has begun re-exporting gas. So it's what we'll call one of the growing pains of doing business in frontier markets. And living through it, it was not fun. It was very, very cold. But nonetheless, we're still optimistic on the country. So with that, I'll pass it over to Vicente Nguyen, the CIO of our Vietnam fund.
So thank you very much, Scott. So hello, everybody. But first, I would like to share with you about the Vietnam economic performance. So if you look at the charts, you can see that Vietnam already have a very impressive performance in 2022. GDP hit 8%. This is the highest in the last 10 years. And the GDP, not only the GDP, but the whole economy was improve in all aspects, from FDI, export, retail, or even CPI. The FDI reached the record high in the history at $22.5 billion US. This is proof that Vietnam is still one of the favorite and the best destination for foreign investors. The export, we expanded the export 17.2%. This is very, very high growth. And we reached the record high in terms of export revenue to 371 billion in 2022. In retail, after a year, we controlled COVID super well. The retail activity already came back and retail revenue increased nearly 20%. This is the highest in the last 2 decades, indeed. Meanwhile, the government controlled the CPI very well too, at only 3.2% only. The next, please. So in 2022, we are the best economy almost in over the world. And in 2023 and 2024, many institutional, they already forecast about Vietnam economic growth. And even though it's a little bit slowed down from 8% to 6.1 in 2022, 3 and 6.7 in 2024, but we are still the best. And if you look at this, we are the best in the region, in ASEAN. And I'm sure that we are still among the fastest growing economy in over the world. So we already see that the economy is outstanding, but sadly, in 2022, the market doesn't reflect the real economy. The next, please. So last year, Vietnam, I think, was the worst performing markets, or among the worst performing markets in all over the world. The index dropped down 35%. Everybody will confuse why the economy looks so well like that, but the index was terrible. Yeah, because of the corruption investigation, manipulation investigation, and the corporate bond issue. So local investors, especially individual local investors, they got fear and they sold off everything at any price, even gold price and steel price at a cent. They don't care about it, just want to run out of the market. And it's because of this, it creates a golden chance. If you look at this chart, you can see that the current valuation of Vietnam is only around 10 times. This is the same level in 2013. 2013, it means 10 years ago. If you see the market behave and performance during 2013, 2018, it's up more than double. So right now we have a chance to do what we didn't do 10 years ago. I think this is a great chance to buy for long term. I mean long term, okay? Because if you ask me that the market up or down in the next 1-2 months, I do not know. But I can sure that the markets will be up in the next 2-3 years, or even 5 years. So the reason why last year in November, I myself and Thomas and Andreas Vogelsanger is the CEO of the fund. We heavily invested into the fund. And myself, again, this month, just 1 week ago, I increased my investment into the fund again, because I strongly believe that this is a great chance for myself. And I want to prove with my clients, this is great. And I have a chance to do what I didn't do 10 years ago. That's a great chance. So we on its back, the market's going up. So how we capture it? Please go to the next. So even though right now banking sector has some challenges and difficulties, however, they are super undervalued. If you look at this chart, you can see the valuation of the bank is completely low. The P is from 5 to 7. That's incredible. Incredible. Okay. We think, okay, this year, probably the bank will face some difficulties, but we have to think about the long-term view of the bank, because it will move up along with the economy. Okay. So I strongly believe that this is nonsense. This is insane. Bank will recover. So we pick up the bank. So we think that bank will benefit from the super low valuation and will increase in the next 2-3 years. Another sector we think that it will strongly recover is, please go to the next one, is tourism. As Ruchir said, China reopened the border, and China played the most important part in Vietnamese tourism sector. 35% of market share, 5.8 million before COVID-19. So it contributed $5.8 billion revenue in terms of tourism. And not only the international tourists, but also domestic tourists. You know, after the COVID-19, everybody in Vietnam, they rushed to travel. During Tet holiday, just a few weeks ago, all the famous place in Vietnam full of tourists. I myself have to queue up 4 hours to get to the top of the mountain, Ba Dien Mountain. Ba Dien Mountain, because it's one of our position in the portfolio. So this year, last year, I'm sorry, 2023, Ba Dien Mountain's cable company. Okay, the profits increased 18 times, but it has not reached the pre-COVID level yet. But another position in our portfolio is DSN. The operating profit of this company increased more than 50 times in 2022. And recently, the BOD of the company just announced to increase the dividend from 15% to 40%, 15 to 40. That's amazing. This is how we capture the recovery. We pick up some outstanding tourism company in the late 2021, beginning of 2022, and it is already solved that the strong recovery help us to outperform again the market. And we absolutely think tourism continue to benefit in the recovery trend. So this is how we pick up the tourism sector. The next, please, Peter. However, we already see a recovery trend, but actually we have to admit that the economy still have some challenges and challenges and difficulties, uncertainty. The credit crunch in Vietnam, corporate bond, even though right now is slowed down, the problem slowed down, the problem is already, but still see some uncertainty. The reason why we still keep our insurance stock like a defensive sector, because those companies have a huge cash in the bank and they don't need to worry anything about interest rate increase, hiking, or the credit crunch, because they don't borrow anything from the bank. They have full cash, okay? And when the interest rates went up, the profits went up. So they enjoy the interest rate hike in debt. So the reason why we keep insurance is one of the largest position sector in our portfolio, because it helps us to balance the whole portfolio. If you look at, this is 4 position in a portfolio, they have a very high cash level compared to the market cap. The market cap of ABI, the largest holding in our portfolio, only 57% of the cash level. They are keeping more than $110 million in the bank, but the market cap is around 57, something like that. So it's completely undervalued. Reason why, even though we try to capture recovery trend, but we still keep this defensive sector to balance our portfolio in case some uncertainty or some challenges really happen. The next, please. And by this way, the reason why it helped our portfolio really outperform against the market, even though it's not really happy when we lost nearly 19%, but if you compare with minus 35% of the market or 25 to even 40 of other funds, okay, we somehow feel a little bit happy, and we think that there's no reason we cannot do it again. We can do it in this year again. So thank you very much for listening.
Thanks everybody for your interesting and insightful presentation. We will go now to answer some of the many questions we have already received from the audience, but you can still submit more questions during the Q&A session. So the first question is for you, Scott. It's about the Uzbekistan Fund. Hello, Uzbekistan Fund. Did you have outflows in 2022, and what is and now? So I can answer this. So the net, we had a lot of subscriptions, smaller ones, and we have 2-3 bigger one redemptions. So the net outflow was $250,000, and the balance of the decline in AUM from the beginning of the year to the end of the year is because of the performance. And the AUM at the end of the year was $16.8 million. Then additional question: 15% cash, or the fund holds 15% cash. Are you planning to bring that down now since the outlook is better? Any specific catalyst you are seeing for 2023? Scott, do you want to reply to that?
Sure. So with the privatizations that are happening, specifically Uzbekistan and perhaps one or two others, we'll be looking to deploy cash there, as well as looking for existing opportunities in our core holdings.
Okay, and catalyst for 2023? I think you mentioned that.
Catalyst for 2023 will include, hopefully, advancement towards Clearstream, partnering with the Uzbek capital markets, and then also further capital coming into the ecosystem, as well as a few privatizations, which will certainly increase the number of active shareholders in the market.
Okay. And for Ahmed, hello. Reason for Iraq currency falling year to date? Ahmed, you're on mute.
I do apologize. I got carried away in talking and stayed on mute. So apologize, everyone. Basically, the main reason, there's a technical reason, which basically, as I explained, is the current our procedures for cross-border fund transfers have been updated to be in line with global procedures, which require a high degree of transparency and data and so forth, which basically had resulted in two things. One was the fact that a lot of our banks are not used to these kind of systems, so they took a long time to adjust for them. Plus, also, we have a large degree of informality in the economy, and which basically led to less money being transferred to fund trades, and therefore, a question of supply and demand. The government has taken some interesting and finally, I think, spot-on measures, such as which will basically all encourage the use of banking one or the other, and encourages us to move away from formality. However, this will take some time to happen, but it's beginning to happen on a small scale, but could accelerate. That answers the bit. I think if I have 1 minute, I can go over what has meant for the market. And I think for certain stocks, I think for the banks, it's been very, very positive. A number of our banks are up between 5 to 25% month to date or year to date as a result of that, because one, they'll benefit from higher margins on FX transfers, but more importantly, any measures the government has taken encourage the use of the banking system, which is part of the thesis that we look in. And the other beneficiary has been a number of industrial companies that compete with imports, such as, for example, a pharmaceutical company, which is up as of today, I think about 45% month to date. There are a lot of beneficiaries from that, but it's a shock to the system, but it's one that system will deal with over the next few months.
Okay, next, something for Ruchir. How has political risk in your markets changed over the last 2 years, and how are changes in political risk integrated in your investment process?
Sure.
Just keep it short. I mean, you can talk about hours for this. About this.
Yeah, sure. Thanks, Thomas. I'll just keep it short. So I think it's the political risk in our markets pretty much is interlinked with the macroeconomic risk. I mean, both are pretty much go hand in hand. I'll give you a real example in the case of Pakistan and Sri Lanka in the last 2 years. That's basically what has changed. That's the key change in the last 2 years. In Sri Lanka, you saw bad politics lead to bad economics, or vice versa, and same with Pakistan. Now you've seen bad politics and bad economics go hand in hand. So that's how we factored in, because usually when the politics is not doing great, the macro also doesn't do great, as we've seen with both Pakistan and Sri Lanka, and that's why we've been underweight both countries over the last 2 years. So it's not only political risks which we take into consideration. I think it, like I said, goes both hand in hand with the macroeconomic risk as well, because the politics plays a very important role in the economic policy making in our markets, and hence we capture both those factors. And like I said, the real world example is Pakistan and Sri Lanka, and we've been underweight both those markets. So that's the way I would put it in a short and sweet way.
Okay, thank you. Very nice. Another question about Frontier Fund. I will answer this. Are you looking to deploy any new capital to Cambodia in 2023 via the AFC Asia Frontier Fund? Is the CSX, Cambodia Stock Exchange, still too illiquid, not enough options? Yes, it's still a small market. I mean, there's one good company listed. It's Okleda Bank. Then there's another good company listed outside of, unfortunately, outside of Cambodia, which is Naga Corp. So we held Naga Corp for, it's actually Naga Corp was the first position we bought for the fund. And we made nice money. So we're definitely watching this, the development. But obviously now that Thailand and Vietnam are also allowing building casinos, is really helpful for Naga Corp in the long term. And yeah, it depends. And, we are a regional fund, so it depends on the valuation. So if Okleda Bank gets a attractive valuation, then why not? We can certainly think about that. Then about Vietnam, combine here 2-3 questions, Vicente. It's about, is there political uncertainty in Vietnam, or is there political risk about the president and so on? Yeah, I mean, you had a change in president, which was a little bit sudden. Maybe if you can quickly talk about this.
Okay, thank you very much for the question. Actually, Paul, in Vietnam, the political, as a Vietnamese, I think, is one of the most stable politics in the world. We will have only one party. Okay, first, only one is Communist Party. We don't have, how to say, democracies or the public.
Republicans.
Yeah, Republicans. So inside the Communist Party, sometimes they have internal competition between this group, the small group, and that small group, like in China, I think. However, the whole party, the whole Communist Party, just focus to one common purpose, one common aims. Okay, so even though they change this group or this group will take power, or that group will take power, it's just a person in charge to do the last common purpose for the party. So even though if you are, say, a foreigner, you look at Vietnam, or you think, okay, this is complicated, president change, okay, but in our language, for me, Vietnamese, I think, okay, it's much better, because it's a kind of corruption, anti-corruption campaign, and it's really powerful right now. It's really improve the country. Okay, right now, I think the corruption rate will decrease sharply. This is the first thing for the long term. And the second thing, a guy with high position of a city, he cannot do bad thing, because it's easily to get in jail if he break the law. So in my point of view as a Vietnamese citizen, I think this is good. Uncertainty, I don't think so. Same common purpose for the whole party. Just only change this group or that group. That is who will be in charge, who will do the aim, the purpose, the strategy of the party. That's it.
Okay, thank you, Vicente.
Yeah.
We have many more questions, but we are short of time. So the last one for you, Scott. Could you discuss the low liquidity in debt and equity markets in Uzbekistan and how your investment strategy addresses this?
Sure. So when we first came here, there effectively was no liquidity in the stock market. It's changed a lot. There's on average, there's a few $100,000 a day when you factor in everything from block trading. But on the debt side of things, typically there's usually very little secondary trading. It's normally people holding debt to maturity. But in terms of appetite for the three local bonds, corporate bonds that there were for a white goods company, a steel company, a financial services company, they were all at least 2 times oversubscribed. The steel company was about 8 or 9 times oversubscribed. So there is demand. On the equity market, our focus has always been since day one to have the majority of the portfolio be in what we call the blue chips of the Tashkent Stock Exchange, and therefore the biggest companies, the most liquid. And when locals and foreigners want to get involved, they're typically buying these companies. Further, from a liquidity angle, being that there are low free floats of a lot of these companies, by being on the ground, we have relationships with everyone from banks to insurance companies to the sovereign wealth funds. So we have certain positions of ours that we've got local companies that would like to buy us out 100%. The problem's that the price isn't good enough, and we see growth prospects in these companies over the next few years. So we're offering them prices that they're unwilling to pay, but 5 years ago they wouldn't pay the prices that they'd be willing to pay today. So having access to that network and being on the ground makes it a less illiquid market than it otherwise looks.
Okay, great answer, Scott. This concludes our webinar today, and since we still had some unanswered questions, we will answer them directly by email. And if you have further questions, you can always reach us by email. I hope you enjoyed this webinar. We will continue to hold quarterly webinars in the future, and we will announce them in our upcoming monthly newsletters. Good night to our participants in Asia, and to the others. Enjoy the rest of the day. Bye-bye.